I think my first investment was in 2000 in February. There's a Paan-wala. When I was having Paan, he told me to buy the shares of digital equipment.
No way.
I stood in line because you had to stand in line to get papers, and I invested 10,000 rupees, which is all I had in savings at that time. And it went to 2,000 rupees in 6 months. So your expenses in 15 years are going to be roughly double. 12 to 15 years will be double. So in 30 years, you will be spending 4x. You're spending 1 lakh a month, today you're spending 4 lakhs a month there. Now my idea is that the money should suffice you to last all the way till you're 90. And if you're 60 right now, that's at least 4x in expenses. But if you're 40 right now, it's 8x expenses. I have realized that I'm incapable of understanding how markets will respond to elections. So
Anything can happen.
anything can happen. My fears are not that the government will change. My fears are more like whoever comes into power, whether it's this government or the another one, is going to change the policy and make it like subsidy oriented. I would say I'd rather wait to see what this government will do. If it shows the wrong intent of doing, I will lose my first 20%. I know that. But I'm willing to lose 20% because if they do things right, I will get the next 100%.
Hello and welcome to I Did It My Way. Today, my guest on the show is an author. He's an entrepreneur. He is an investor. He runs a PMS and he wears too many hats. And he also has a best-selling book called Money Wise. He's a personal finance guru as well. Joining me on the show today is Deepak Shenoy. Deepak, thank you so much for being here.
Thank you so much, Sonia. It's an honor to be here, and thanks for all the kind words.
And what is the hat that you love wearing the most?
Honestly, I keep thinking that the hats that I used to wear, that I used to love, I always have. I've been a different set of, things over the years. I think there was a time I used to be a programmer, and I used to love program. I could program all night, and I miss that world. Sometimes I feel like I want to wear that hat again, and time and again the team reminds me that the world has moved on from whatever I knew, and therefore you're going to start from scratch, and I don't have that energy, or I will find that energy someday. I love writing. I still love writing, and it's something I discovered I love much after I had finished college and gone through. So I love the art of just sitting down and writing. Perhaps that comes out in a little way because I'm very noisy on Twitter, and therefore it's like my thoughts go unfiltered into the ether.
But that's worked really well for you.
It has. It's surprisingly, it surprisingly has. It's like almost like I thank the stars every day that the audience still wants to listen.
What I love the most on your Twitter handle is when you do live tweeting of big events like the budget. It helps everyone. I'm sure it helps a lot of people, but even people like us who comment on the budget, right, live. I mean, these kind of threads really work. But you've seen that evolution of the ecosystem, right, from TV to blogs. You had your own blog as well, Capitalmind, which is now turned into a money management business. Tell us about that.
Yes, it's been an interesting journey. So we now a PMS, a SEBI registered PMS. We have applied to become a mutual fund, and that's application in progress. We manage about 1,900 crores. And very interesting because we're in Bangalore. We live in a place where, relatively speaking, people are less aware of markets. Of course, that was when I started. Now I think everybody's aware about markets. But then the other part is it started out in a very different way. Capitalmind was a hobby. I was a programmer. I was running a business in the software services space in Bangalore. And somewhere along the way, I learned the concept of accounting. It fascinated me. I think somehow, my father and all his brothers are bankers. I became an engineer. I was the black sheep in a way of that family. But then the whole thing came back to me, right? The finance and the accounting thing. And then it came back in the most weirdest way possible. No formal education, but then I learned almost, on my own. And somewhere along the way, I wanted to marry the concept of tech to finance and said we'll do algorithmic trading. In 2007, we set up a company called Money Yoga. Now that both are in fashion, but at that time we got the domain name.
The two things I love the most, money and health.
Yes. That's, and I should do a lot more of the latter than the former, but unfortunately, here's where we are. But here, the concept was to kind of build an algorithmic trading platform, or at least trading strategies that will allow people to, and we didn't actually want to manage money at the time. We just wanted to build the software.
There's one thing that I really want to talk about. It is this book that you have written, right, Money Wise, and it is a great book on personal finance. But I want to start by asking you, what is your own relationship with money? How has it changed over the years?
You know, honestly, Sonia, I'm the worst person to um, even perhaps write that book. In terms of my own personal life, what did I do? I never took a steady job. 2 years into my career, I started a business with nothing. I mean, I had 30,000 rupees, and that's what I put into the business. And four of us put that and started a company. We built a decent, business, but I never saved any money. So I was bankrupt at the age of, just about when I was getting married. I'm so happy my wife married me at that time, and I mean, she, of
What
course,
did she
she.
see in you? No, I'm
Uh,
kidding.
no, but so it was interesting because I mean the business that I run was okay, but I was going to get out of it, and I was moving on to a job. Um, we were trying to buy a fridge. I bought a lot of stuff. We set up a house, and then I didn't have enough money to pay for the fridge. The check came back, and the banker called me and said, "Deepak, this check, you don't have enough money in your account." So then I had to take money from my wife and then pay for this thing. So it was not rock bottom. I mean, I think I've seen other people hit rock bottom, and I don't think I was that bad. But I know that it was the time when I realized you cannot have this level of lack of money. So I
So, were
thought
you investing at that time also?
I 2000 I think 2002 is when I started investing per se myself, because that's when I realized there is some value to this. Uh, I have some hilarious stories of my first investments. I think my first investment was in 2000 in February, when I was convinced, and I hate to say this, but this is me. There's a Paan-wala, and I was having Paan. He told me to buy the shares of digital equipment.
No way.
And my mother already owned digital
That's
equipment.
a story for the books.
This is, and interestingly, never before that had he ever talked to me about investments. And never after that has he talked to me about investments. This was February 2000, and I heard him, and I went back and I said, we should buy some digital equipment. Convinced my mother to buy digital equipment, and I went and applied for a fund called the ICICI Prudential Technology Mutual Fund. I stood in line because you had to stand in line to get papers, and I invested 10,000 rupees, which is all I had in savings at that time. And it went to 2,000 rupees in 6 months.
Your 10,000 rupees.
My
became
10,000, 2,000 rupees in 6 months. So because this was a dot-com bust and you happened right in front of you, and we could see this happen, and you're like, okay, what possessed me to, I mean, it was not a large sum of money, but even then
But
losing.
shouldn't it work the other way around? Your Paan-wala should be asking you what to buy, right? Rather than
At the, I
rather
mean,
than you
yes.
taking
In
his
fact,
advice.
this is now my sign of this, the bubble that we keep talking about, is that when people who normally would have to ask you for advice start telling you what to buy, that's when you're going to walk away and say this is a bubble. And honestly, that's not happened so far, which is why I'm confident we're not in a serious amount of bubble right now. In 2007, the markets first went up 50% and then went up another 45% in like less than a year and a half. I think it was just crazy. In 2007 I was new to the markets, right? So when I told met my family members who were in stocks for the longest time, they've seen the Harshad Mehta time frames and all that stuff. They're like, if Deepak's into stocks, we need to get out. So I'm like,
I can't believe that.
yes, I mean, this was unfortunately because I was this guy who was like, I am buying when the stock hits an all-time high, and I'm going to keep buying on the way up, because I loved the concept. I mean, when I was programming, I was looking at everything, and the thing that seemed to be most working was when the stock hits a new all-time high, you buy it.
So, from someone in 2007 who had no clue how this market works, to here you are sitting today who's written a best selling book on personal finance, how did that happen?
Over a period of time, you realize that teaching, or the attempt to teach people, is the best way you learn. So when I'm trying to, say, okay, this is what happened, and I'm trying to write a blog about it in a way that says, I want to educate you about X, by the time I've written it, I know more about it than I did when I started off writing about
Correct.
it. I mean, did you know, for instance, that there are 3 layers of plastic in every Lay's,
Packet.
chips packet, and the 3 layers, the one layer in which, and the enemy is oxygen. So if you have oxygen inside, it ruins the chip, it makes it soggy. So you want to take out oxygen, so you want a preventive layer, and one is made of BOPET and another one is made of BOPP. And why do I know this? Because the prices of these companies making BOPET in India were going up like crazy. And like I said, I like all-time highs, but this stock had gone from X to
Which
3X.
one was it?
I think there was Jindal Poly. There were four stocks at the time, or three stocks. Jindal Poly, there was Polyplex, and there was
Correct.
Uflex, I think. And they were going up like crazy. So why do I mean, I think about it all the time and say, why do I even need this information? This is like Fourier transforms at some point. I know it's useful for some people,
It's
but
very useful information, especially while picking stocks, right? I mean, that's how some of these things really work, and that's how you pick multi-baggers. There is this big income divide, right, in India. I mean, this K-shaped recovery, as everyone's talking
yes.
about, that's not necessarily a good thing in the longer run for any economy. Your
I
thoughts?
agree. I think there should also be a massive recovery at the bottom end. But
Which
that
is just not happening.
it's currently not happening, but it's changing. The contours of it are changing. I think after the elections we'll find out that a lot of money has now moved away from the cities to the villages just for the elections, because people are getting money.
Correct.
So those people now, when they have money, they will be able to find avenues to spend it. If you're in a village, by the way, it's not that you don't have any money; it's that you don't have avenues to spend it. A little while ago, we were talking about Bangalore and the villages of Bangalore, if you may. And there are times when you can have money, but there's nothing you can do to spend it. So what happens is either you save it, you hoard it, you buy more real estate, and so on. This is how I think the structures we find, for instance, in the PMS, that we get people from the strangest named places who call us and say, "We don't even want to meet you. We'll give you our money." And I am surprised out of my wits, because I'm thinking, because we are 50 lakhs plus, that's the minimum you have to invest with us. But they don't mind, because they've seen us over years, and they said, we've formed a trustworthy bond with you, at least online, and we want to be able to communicate, and we can do this over email, we can do this over a phone. I'm surprised because I'm thinking first, it's a large sum of money to give to someone they don't know, but also, how come they have so much money in this little place? Or a place like Sulya near Karnataka, near Mangalore in Karnataka, or a small, tiny village whose name you can't even pronounce from Kerala, which is amazing, because I mean there is a lot of small town India that has a lot of money, and because there are no ways to trickle it down. So, for instance, in Bangalore or in Bombay, you find that the people who are in the lower income sector here are actually high income for a village in comparison, because just that they have high expenses, so they have very little left. Uh, in the villages, the problem is that there's no trickle down. If the rich have money, they keep it. Since there's no avenue to spend it, nobody else gets to participate, because it's when the rich spend, is the poor make money. Unfortunately, this phenomenon
Money
has
flow is not happening.
there's no flow.
Everybody's talking about fire, right? Financial independence, retire early. Now, there are two aspects to this. Retiring early is also a choice that you want to make, but financial independence is something that is a need, I feel, because as you said, we don't have any kind of social security at retirement, etc. But what is your definition of fire? I mean, do you believe in the concept? And a lot of people are talking about financial independence, retiring at 40. You think it's advisable?
Okay, so I am way past 40, so, and I'm fine. But maybe I'm a workaholic and in that way, but I think,
Are you financially
honestly,
independent?
I think I am now, because now we've got a business which has profits and, things like that. So, and, there's a decent amount of income that comes my way. But, I don't think I'm financially independent yet, in the sense of the numbers that I'd like to reach. The numbers that you want to reach is roughly 30 times your annual expenses. So you're spending 10 lakhs a year, you want 3 crores plus a little buffer, 3.5 crores. So you're spending a lakh a month, you need 4 crores today. And that reason you need that today is not
That
because
4 crores is excluding your major expenses like children's education, children's marriage, all of that.
yes, so all of those are separate goals. So you have to compartmentalize your few corpuses into what I'm going to save for my retirement, what I'm going to save for my kids' education. So your expenses in 15 years are going to be roughly double. 12 to 15 years will be double. So in 30 years, you will be spending 4x. You're spending a lakh a month today, you're spending 4 lakhs a month then. Now, my idea is that the money should suffice you to last all the way till you're 90. And if you're 60 right now, that's at least 4x in expenses. But if you're 40 right now, it's 8x expenses. So that means you're going to have to meet that much towards the end of your, or coming closer towards the end of your life.
When did you start investing in equities? And what was that turning point for you where you decided that, you know what, I need to start investing so that I can build a corpus for my retirement?
I think 2005 is when I really started putting money in, because that's the time I really started getting a decent salary. I left my first company which I started and joined a job. Now I had excess savings, so I was able to save and very quickly built a corpus into equities
And
itself.
how much were you saving at that time?
I think my salary at that time would have been, at that time it was very decent. It was 2 lakhs a month for something.
That
I
2
think
lakhs?
I was probably investing nearly half of it because I was able to save. I mean, we were just two of us at that time. It was just rent, so there was nothing majorly to spend. So most of the remaining money would get
Would be in
invested.
equities.
For the most part, I think at that time I even bought a few mutual funds.
Okay.
Mutual funds were expensive. You paid a 2.25% entry load, and then they had an expense ratio on their own, and then a bunch of other things. So it was difficult to invest in. But then you could buy equities quite easily.
You were doing direct stocks as
I
well.
was doing a lot of direct stocks. I was even doing derivatives and learning about them
Oh,
and stuff like that. So, in fact, I chronicled a lot of this in Capitalmind. At one point, I was so frustrated that everybody around me was telling me like that my
Paan-wala.
not my Paan-wala. This was before the Paan-wala, when my family members were saying
yeah.
Deepak is investing, we should get out. I wrote a poem. My son was young at that time, and he would sleep to ghazals. So, and one of the ghazals was Jagjit Singh that he liked to sleep to. And in that, there's a ghazal called "Hosh walon ko khabar kya, bekhudi kya cheez hai." And the markets were like that, right? Because the markets were going mad. And all these people who had seen the Harshad Mehta times and all the older times were like,
They
no,
would
this
stay
is
away.
not. They would stay. And I was watching stocks going up 50% in a month. And I was like, Hosh walon ko kya, khabar kya, bekhudi kya cheez hai. And then, I ended up with this, I think in that post, I ended up with this ghazal by Pankaj Udas. आज पीने दे और पीने दे कल करेंगे हिसाब ऐसा की. So, because that was what it was. It was
You
just
just wanted to ride that wave.
yeah, I would ride. You had to ride the wave, and you had to know when to get off. It was riding a tiger, and when you ride a tiger, often people who look at people riding a tiger are like, "This guy is crazy
It's
because
crazy.
he won't be able to get out." But the tiger gets you a lot further ahead than you would have been had you even walked or run. So sometimes you can,
Taking that risk is worth it.
is worth it. So I did that at that time. In fact, I ended up going short just before there was the big Reliance Power issue and the crash and post Bear Stearns. And I chronicled that as well. And the reason I had gone short was because I was going to Bombay. I was moving to Mumbai, and I didn't want my positions to be impacted during this time. So I took on short positions and recovered more than the portfolio fell, because I was higher, more short during that time. And I remember that time I was looking at this and saying, sometimes the market just, you just get lucky, because the market was circuit down once in one of those days. So, and the rest of the year was miserable. This is just before you joined, but it was down 75 or 80% that year. Sorry, no, 60%, 6,300 to 2,200.
2008.
2008. So I remember the bottom was 2,200. I remember on that, of course, it was a very, very short time, but you could not imagine how crazy it was. At 4,000,
Nifty.
Nifty,
No,
the
yeah,
Nifty was 6,300. It fell to 4,000. I met someone in Bombay, and I was trying to sell this fund to somebody, and we were doing our algorithmic trading thing, and we were kind of making money. It was a little bad thing to say because everybody was losing money, so we were keeping very quiet about it. But there was this woman who was running this brokerage where we were working in, and she came to me and said, you guys are going short every day. I said, I don't know. The algorithm's telling me what, I'll just do it. He's like, no, but don't you believe in India? And India is not going to fall. 6,000 to 4,000 it has fallen, 33%. Can you believe? And don't you think there is a future to India? And for the first time in my life, this is me, a techie, who's not supposed to really know too much about stocks and all that. I went back and said, she's right. And I bought myself a leveraged position using about 30% of whatever I had saved in the Nifty. And then Nifty fell to 2800. I was out. All my margin was gone.
Wow.
So I was like, my God, I wiped out 1/3 of my savings just like that. And
So what was your lesson from that?
don't be patriotic. Why was I taking a leverage position? If I hadn't taken a leverage position, I'd be fine.
Correct.
And I was.
So the lesson in this is not to take leverage positions.
But why did I take I mean, I would take a leverage position even now if I had the conviction based on my own analysis and data, not on a patriotic fervor, right? So the problem is I took this position on purely because maybe she touched a nerve. And she said, don't you think India will fight? But we love the underdog, right? We love to be the underdog. We love to be the person who's down. I picked the bottom and I came up and I was leveraged when I came up. And my God, I'm
So for people who are young and watching you right now, who are just new investors in the market, who have never seen a bear market, right? A big bear market like we have seen. What is your advice to them?
I think my core advice to most people at this point would be invest only what you can afford to lose, especially in equity markets. And more importantly, if you're willing to live with the volatility that something is going to fall 30%. Most people don't get this. I tell them that you put 100 rupees, imagine it is 70 tomorrow. How miserable would you feel? If you don't like it, then invest lesser to the point where you kind of are okay with this. If you get to a point where you have 2 or 3 times your annual income in stocks, that's when you start to realize that if market falls 30%, I lose a full year's salary on the portfolio. Then you want to be a little more careful of how you want to invest and stuff
But
like
at
that.
this point in the market, given that we have a big election verdict upon us, given that there is a lot of volatility, how are you feeling about it?
It's a very good question. Like I said, in 2004, with the left government in place, there was after the elections when the left government came, I think I personally said the market is finished. The government has a communist element to it. There is not going to be any return in the markets for the next 3 years. The next 3 years was a 2x return, which like I talked about 3x return. After that, I think I have realized that I am incapable of understanding how markets will respond to elections. So
Anything can happen.
anything can happen. And because of that, I think it's better to respond. So, for instance, what are my fears? My fears are not that the government will change. My fears are more like whoever comes into power, whether it's this government or the another one, is going to change the policy and make it like subsidy oriented, remove the government spending on infrastructure, slow down a lot of sectors which are otherwise doing fairly well right now. If they were to do that, I would be worried about my portfolio because all my core theories go out of the window. I would say I'd rather wait to see what this government will do. If it shows the wrong intent of doing, I will lose my first 20%. I know that. But I'm willing to lose 20% because if they do things right, I will get the next 100%.
So you're willing to give them the chance.
I'm willing to give anybody a chance.
Okay, we've actually run out of time, but not out of things to chat about.
Yes.
But Deepak, thank you so much for being here on the podcast. It was an absolute pleasure speaking to you about your journey, about money, about how you see yourself in the future, and all the best for the future.
It was awesome. Great. Thanks so much.
Thank you so much for
you.
being on the show. Thank you for watching CNBC TV18. For all the latest news and updates, do follow us on our social media platforms.